You're welcome to Beyond the Numbers, and we're coming to you live from our studios here in Cocobod, Accra. This is JoyNews, and you're welcome to Ghana's leading business analysis program, Beyond the Numbers.
This is the only show dedicated to market development, bringing you updates on deals and key headlines shaping your business day.
Well, Winston, there's something amazing for our audience today. I mean, MTN Ghana has some great, information for us, and we have an exclusive with them. Tell us, give us the inside scoop. What are we to expect?
This afternoon, basically, the group CEO, Ralph, was in Ghana, and he interacted with the staff of MTN at the headquarters. Wisanamwa was there to sit down with him and discuss their prospect this year, what they intend to roll out from MTN Momo to digital platforms, and most investment they intend to put in their infrastructure. They want to ensure there's quality and affordable access to internet, not just for browsing, but for businesses as well. And these are some of the development they intend to roll out this year. And we have that exclusively here on Beyond the Numbers.
Great. Well, I really think this is like very timely, especially when we're about to see the most promised popular tweet for our economy. You
Absolutely.
know.
It's a conversation we'll be having also here on Beyond the Numbers. The bill has been passed. Now they have a 24-hour secretariat that will be at the office of the president. We'll get to the business community to understand how they are accepting or embracing this plan and how they intend to roll out and communicate to their various factories and industries. And before we came on the show, last year, Donald Trump announced several tariffs, including African countries, most importantly, 50% tariff on China. Right now, as we hear on the show, the Supreme Court in the U.S. has announced that those tariffs are basically illegal.
Great. But let's get into our top business stories, headlines for today. Winston?
We begin in Parliament, Michelle, as lawmakers have ratified a memorandum of understanding between government, the Ghana National Petroleum Corporation, and the contractor parties to extend the petroleum agreement covering the West Cape 3 Point and Deepwater Tunnel blocks to December 31st, 2040. The agreements were originally due to expire in 2034 and 2036. The extension comes with a $2 billion investment commitment. The funds will support the drilling of at least 10 and up to 20 new wells. It will also finance critical subsea infrastructure to sustain production in the Jubilee and Trenebois and Nira in Tom fields.
Well, Winston, from the parliamentary corridors, let me take you to the agricultural space, where a report commissioned by the Chamber of Agribusiness Ghana shows that the country spends about 760 million cedis each year on tomato imports. Now, the imports include more than 75,000 tons of fresh tomatoes and over 75,000 metric tons of tomato paste annually. Now, Ghana is now ranked the world's second largest importer of tomato paste after Germany. The chamber estimates that about 220 million cedis is lost annually in uncollected income taxes, VAT, and corporate taxes. It also says nearly 250,000 potential jobs are not created because of the country's heavy reliance on imports.
Indeed, Ivory Coast is considering cuts in the price it pays cocoa farmers to align with Ghana, according to two government sources who spoke to Reuters. The farm gate price is the amount farmers receive after harvest before additional costs are added along the value chain. The Ivory Coast Ghana Cocoa Initiative says both countries, which together account for about 60% of global cocoa output, have been coordinating closely since the crisis in the sector began.
Well, also the Customs Division of the Ghana Revenue Authority has intercepted 12 articulated trucks along the Dowinga-Tema Road. Officials describe the operation as a serious breach of Ghana's transit regime. The trucks were part of a consignment of 18 vehicles declared as goods in transit from Akanu to Niger through Kulungugu. However, they were intercepted without a mandatory custom escort. Authorities say the breach carries significant revenue implications with an estimated tax exposure of 85 million cedis.
Indeed. Now to oil sector matters. The Chamber of Oil Marketing Companies and the Chamber of Bulk Oil Distribution Companies have threatened to embark on a strike over the alleged diversion of funds from the LPG fund to the Ghana Cylinder Manufacturing Company. In a joint statement, the two associations say they will pursue all legal means to reverse the decision. They describe the move as a breach of statutory mandate and a deviation from the fund's original purpose. According to them, the action undermines national policy and public trust.
Well, Winston, Ghana remains Africa's fourth highest borrower from the International Monetary Fund at the start of 2026, despite a decline in its overall public debt. Now, figures released on February 19 show Ghana's exposure to the IMF stands at 1.96 billion special drawing rights, equivalent to about $2.84 billion. The reduction reflects ongoing repayments under the country's current economic program. Now, Egypt tops the list, followed by Cote d'Ivoire, Kenya, and Angola.
Now, big on telecom space as MTN Group has agreed to buy IHS Towers in a $6.2 billion all-cash deal. Shareholders will receive $8.50 per share, representing a 35% premium. The transaction will see IHS delisted from the New York Stock Exchange. MTN says the move strengthens its control over critical digital infrastructure across Africa. Will there be a ripple effect here in Ghana's stock market? We've got answers for you here on Beyond the Numbers.
Well, let's head over to the Cedi Watch, where President of the Association of Ghana Industries, Dr. Kofi Nsia-Poku, says the recent appreciation of the cedi is not enough to trigger immediate price reductions, as manufacturers are still recovering from heavy losses incurred during the period of a weak currency. He stressed that the stronger cedi is only one factor in pricing decisions. Year-to-date depreciation has now crossed 5%.
Now, still staying on currency matters, the Bank of Ghana is warning that the pressures from the dividend payments scheduled for February 2026 and March 2026 may pose downside risks to the Ghana cedi. According to its January 2026 monetary policy report, a fall in gold prices due to strengthening global economic conditions or the escalation of geopolitical tensions could also pose downside risks to the Ghana cedi. In the domestic forex market, the local currency came under some marginal pressure in early 2026 after an impressive performance in 2025.
Well, a new KPMG research shows T-bills lead as 43% Gen Z say they have no investment. The survey says 25% of Ghanaians prefer treasury bills. 11% choose fixed or term deposits.
Now, on cocoa matters, the majority caucus in Parliament has expressed alarm over the financial health of the Ghana Cocobod. It cautions that the institution requires substantial working capital to remain functional. Chairman of Parliament's Finance Committee, Isaac Adongo, disclosed that Cocobod faces a significant liquidity gap. How much does Cocobod need to remain operational? Finance Committee Chair says 30 billion Ghana cedis.
Well, you want to stay with us because we've got more for you on the show. Market Watch is next. Let's wrap up the trading week together. This is Beyond the Numbers. Please stay with us.
Welcome back to Beyond the Numbers here on JoyNews. My name is Winston Tak, and I'm doing this with
Michelle Ejekum.
Amazing. Now, we're going straight to assess what is happening on the financial market, especially the Ghana Stock Exchange, with a lot of happenings, basically about 200 billion Ghana cedis as capital in the first month of January is something we're going to be assessing. And we are privileged to have joining us here Raymond Anane of the Black Star Brokerage. Raymond, it's good to have you with us.
Nice to have me too.
Great. Now, what do you make of the 200 billion capital that has been made basically on the Ghana Stock Exchange? Is it the first of its kind? And if it is, what are the basics that is making this quite interesting?
Yes, it is the first of its kind. I think this is an all-time rally. So the market, if you look at the composite index, that's rallied about 30% year to date. And if you look at the financial index too, that's rallied a little over 30% year to date. But what I really wanted to highlight today is this, to go beyond the numbers, right, and look and check what's actually happening in the hood. So the market right now is actually characterized by two dynamics. One I call the real market, and then the other one I call the liquidity squeeze. So let's take a look at the last 2 weeks, right? There's been a huge divergence. If I take a market leader like MTN, now that trades very well. The trading there is very deep. Yesterday, for example, we saw close to 32 million shares coming through in trades. So just the last 2 weeks, MTN Ghana has traded over close to $500 million Ghana cedis in value. On the other hand, let's go ahead.
Go ahead, Raymond.
So on the other hand, like I mentioned, there's a liquidity squeeze with some of the names. We see the names popping up every week or day in, day out. But that popping out is actually just driven by, let me say, a scarcity. So there's a fundamental disconnect. So that is what I wanted to point out.
All right, thank you very much, Ramon. Interested enough, I was going through the data from the Ghana Stock Exchange, and I was going through the GS equities market for January 2026, and I can say I was amazed by the numbers. The volume traded is basically around 705 million cedis in 2026, compared to 108 million in 2025, basically giving you 548% increase in the volume of traded compared to the same figure. So it appears that it's basically like 5 or 10 times volume traded in 2025. What is happening in the market that is making it quite juicy?
The reason why we're also seeing a rally in equities is just what is happening in the debt side, right? There's actually a lot of liquidity right now. Institutional investors are struggling to put money into use. So we see rates coming down, inflation coming down. So that's why most investors are turning into the equity markets right now.
Great.
Well, Ray, would you say that foreign money is playing a role in this, or do you think that investors are becoming more active?
I would say investors are becoming more active in the equity markets, but the investors are actually being broken down into, we have the institutional investors and then we have the retail investors. The majority of the rally you are seeing right now, I must point out, is within the retail investor space. Institutional money, big pension funds, smart money, they are waiting on the shorts and just watching what is playing out.
Raymond, tell us, who are the laggards this week? We assess for Monday, Wednesday, and today, basically Friday. Who is closing highs and who is closing lows?
MTN is closing. Okay, actually, the market just closed. MTN has rallied this week. We have Bank also rallying. We have GCB rallying. EcoBank has also been rallying very well. But this, like I pointed out, these are just price rallies. We haven't actually done any fundamental research to connect the two.
And who are those? Who are the laggards, basically?
As of today, I see Total down today. I'm just looking at the stock exchange market right now. I see Total down. I see DigiCat down a bit. Yes.
So going into next week, basically, who do you expect to hit high in terms of next week projection from your market analysis?
So we typically don't list out individual takers. We try to just comment on the general sector. So overall, we still like the telecommunications sector led by the biggest telecom name on the market. We also like the financials or some of the banks. I wouldn't say all the banks, but some of the banks.
Right, Ray, so looking at how impressive, the impressive number we're getting on the Ghana Stock Exchange, do you think this is a good time for first-time investors to get in?
It depends on where you are sitting as an investor. If this is your first time investing, you want to be very cautious, and you also want to just do your research before you jump into. You want to avoid FOMO, avoid the fear of missing out. Actually do your research well before you jump into it.
Thank you very much.
Right.
Yeah.
Winston, before we go, I'm just thinking out loud. What are some of the indicators we should be looking out for to be sure that this reach or this result is sustainable?
Overall, our research shows that equities are still going to rally, right? Okay. The only caution we are putting out there is investors should just be to be cautious, right? To do the research well, to look beyond the numbers, as you guys always point out. Yes.
Raymond, you are really beyond the number. Thank you so much, Raymond Anani, with the Black Star Research. Thank you for joining us. Certainly next week, we'll be having you more for more analysis and breakdown on what is happening on the market. And we are still here on Market Watch. And this is we speaking to the effect of what is happening in the Ghana Stock Exchange. Raymond has given us insight. Certainly look out for MTN, EcoBank, and some interesting investment. Make sure you speak to a broker before you get to the market and get the right information. This is not a betting platform. It's an investment platform. So you need to have the very wise investment decision by having the counsel to go there. But we are moving on still on the market watch, where we're going to have a conversation. But before that, I want to remind you that we spoke today with the CEO of MTN Group, Ralph Maputa, and he told us indeed some insight and investment they are having for the year 2026. And next on the market watch is assessing the 24-hour bill that has been signed by the president, and this has been assented by the president basically. So now we have a 24-hour authority. The secretariat will be at the office of the presidency, and we are speaking to the business community. Joining us right now is the CEO of the Ghana National Chamber of Commerce and Industry, Mark Bedu-Abuaji, to give us insight on what the business community are looking forward to with regards to this bill. Mark, it's good to have you with us this evening. Hello, Mark.
Yeah, can you hear me?
Yes,
we can now.
And clear.
Yeah, thanks for having me. Good evening to everyone. Afternoon.
Wonderful, Mark. Now, help us understand from your perspective, how is the business community receiving this bill at the moment?
Yeah, basically, for me, I think it's a good news. It's something that we've been looking out for. I mean, if you read the bill and also the 24-hour economy project, you realize that it's clearly stated as going to be private sector led. So as for us, we see a lot of potential in the 24-hour economy. So we've been waiting for it. In fact, when it was a campaign promise, it wasn't too clear. I mean, we heard about 24-hour, but not much was said until when it was launched in July. That's where we got a lot of details about what is going to be. And obviously, it goes beyond what we're thinking of people working within 24 hours. There are a lot of other projects or agenda within that 24-hour economy project that I think that it will help all of us. It will help the business community. It will help Ghana at large and also help us change the structure of our economy. So it's a good news for us. For me, I mean, from the beginning of the year, something that has really caught my attention is this assenting to the 24-hour bill.
One will ask, before the drafting, the process of getting forward this bill, what sort of consultation went with the business community before we got to this stage?
Well, I think there have been a number of consultations. If you look at the process, I remember somewhere last year, the president himself met the entire private sector, the key institutions of which the chamber was well represented. And he presented the 24-hour economy and gave us opportunity to make inputs and also ask questions. But I think that there should be a lot more engagement, because it is private sector led. It's supposed to be a project to be undertaken largely by the private sector. So it should be seen as such, and they should hear our concerns and involve us along the line wherever they are going. I think the government alone cannot do it until we work together. It's going to be a collaborative effort to be able to achieve the success that we all want. So they have done a bit of consultation, but I think that there's more room for improvement, that all of us will have to come on board. So I'll urge the Secretariat, once they are the ones giving the authority to drive this agenda, they shouldn't leave out the private sector. Of course, the chamber, as the mouthpiece of the private sector with the largest number of businesses, I think should not be left out anyway along the line. We are also open for any discussion. Our members are ready. With our members scattered all over the country, I think we are ready to also support and ensure that it becomes a success.
According to the bill, it's going to be built on 3 pillars, basically from the production system development transformation, second, which is supply chain and market systems, and the third one is development of labor. Looking at these 3 pillars and how they are structured, do you say that, especially, let's start from the development of labor perspective, comparing academia, linking academia to industry, the quality of expert, technical, in terms of how we have those systems and machineries in place, engineers and all that, would you say we've aligned them enough? Or would this bill bring that synchronization that we've been expecting for quite some time now?
Well, once we are starting, obviously, there will be some challenges. At least now we have individuals within the labor for that will help us to start. But going forward, we need to strengthen some aspects of our labor force. The TVET itself, for me, is very, very important. As a chamber and as a business community, we are also helping to bridge the gap between academia and the private sector. And we have actually embarked on a very important program that we call Junior Chambers, which we are launching in almost all the tertiary institutions in this country. Okay. We've launched that one of University of Ghana. We've done Tape Technical University. Next month, on the 12th of March, we are launching that of the Petroleum University of Science and Technology. The idea is to bring our needs to the doorstep for these students, and also help them to be business creators and not only looking for a job after they have completed their education. So we are looking at all aspects to bridge the gap. But I think we should begin to look at how we can prepare students to move straight into the factory floor with just a small orientation, and they are able to work. This is something that I think we need to do more to bridge the gap between academia and businesses. But I think that it's a good start. If you continue this way, we are likely to prepare them for the business community once they complete their education.
If you look at the average supply chain structure in terms of Ghana, basically sub-Saharan Africa, Ghana, if you're doing some transfer of product from the farm gate to the produce and the manufacturing sector, we tend to lose basically at about 60 billion Ghana cedis in terms of losses, which is supposed to be averagely globally around $15 basically. But it appears that structure has been a key bane of your sector. Going into this new frontier with the new 24-hour economy, what do you propose as the right approach to handle that challenge?
I think one key thing, if you look at 24-hour economy, is logistics and transportation, which has been clearly stated. It's one of the biggest challenges that we face as businesses. Of course, our roads are also not good. The railway lines are not working. And if you even want to export a product from Ghana, even to maybe Nigeria, we don't have the shipping lines to do that. I mean, the local ones to do that. So sometimes it has to go to Europe before it comes back. And if there is a perishable good, by the time it gets to the African continent, everything will be gone. So I think it's an area that all of us should work on. We should be concerned. As a chamber, at the level of the Federation of West African Chamber of Commerce and Industry, we have initiated what we call the Sea-Link project. And I think the 24-hour economy can tap into the Sea-Link project, where we sought to have a number of ships that will run within the West Africa and the East African coast to be able to transport our product to the right market. So logistics is very key. It's one thing that, if you are not careful, is going to hamper the success of the 24-hour economy. But as clearly stated in the document, I think it's one area that they are looking at just to avoid any losses, especially also when it comes to the service loss, when it comes to the agricultural sector. So I think it's a comprehensive program that seeks to transform our economy. My excitement is the linkage between industrialization and export. As you may know, our economy is deformed. When I say deformed, it means for the structure of the economy, we virtually import everything that we need as a finished product, and also export our goods in the raw form, which we are not able to earn the right prices for that. So this project is actually linking industrialization to export, so that we produce to export. That will help us to change the structure of the economy. And looking at the long value chain that we have from production to export, we are likely to create a lot of employment within the value chain, the nodes within this project. So I've seen that they're estimating about 1.7 million decent jobs for Ghanaians under the 24-hour economy. If you're able to do that, of course, we'll be lucky. But I also have a very concern about issues with implementation. It's not just enough saying you have a 24-hour economy, you have assented to a bill, but the implementation is very key. It's not the first time we have had such a brilliant idea, but we have had a very poor implementation. So I'm looking at the implementation aspect of it. What is it that we can do to ensure that we implement at least just about even 60 to 70% of what we have in the document? We can easily transform our economy. There needs to be a document, private sector reform strategy 1 and 2. And I have said that if you are even implemented just 30% of that strategy, would have been able to change our economy. So I think implementation is key. All of us will have to come on board and ensure there is a successful implementation of this.
Mark, briefly, before we let go of you, help me understand, in terms of funding, are you satisfied with the structure? Just briefly. All right, I think we lost.
Well, funding is very clear. Yeah. I'm not really satisfied. I think we have for the private sector. With high interest rates, I don't think businesses will be comfortable to borrow at 25% and push into this long-term project. Fundings are also, long-term funding is also not available. So I think it's one of the areas that we have raised concerns that we are ready to engage in the secretariat.
Thank you so much, Mark Bedwabadi, for joining us here on Beyond the Numbers. We look forward to breaking down this conversation subsequently in other conversation here on Beyond the Numbers. So we just touched on the 24-hour economy. There's a new data also by KPMG telling us that indeed people have really, some are even there do not have a bank account, have no investment need, and these numbers are quite telling of our current structure of hegemony going into the old age, the Gen Zs who are becoming fun. So what do you say? That's quite interesting. All right. So
I'm actually surprised because for Gen Zs, I'm surprised that. But anyway, I think they also have something that they like. But we'll find that shortly after our conversation.
Exactly. And to help us join this conversation, to break down these numbers, is Dennis Ansu, is a senior manager on strategy operations at KPMG. He's joining us right now on Zoom. Dennis, it's good to have you with us this evening.
Good evening, and thank you for having me.
Great, Dennis. So first of all, could you take us through the process? How did you come up with these findings?
Right. So this survey is actually the banking industry customer experience survey.
Okay.
And it's one survey that we've been running for a couple of years in Ghana and then by extension in Nigeria. So it has a West Africa outlook, not just focusing on Ghana. But in terms of Ghana, we have had some telling results and some telling findings over the years with respect to how the behavior of the various age categories that we currently have in our system, how they behave. And that is what informed the current finding that we put across in the reports that we shared.
Right. So what do you think, or what is the reason you think that the Gen Zs, let's focus on them now, are moving towards survival mode instead of the investment mode?
Right. So generally, it's as a result of two things. One is their behavior towards the disposable income that they ordinarily have. And then also from a macroeconomic point of view, things that are happening which are actually impacting what they are able to spend, particularly in the area of investment. One thing we noticed from the survey results is that when they were asked about the various areas where they typically push their money, like you mentioned, they are typically within the survival mode. They spend almost about 73% of their disposable income on food. This is a very telling feature of the Gen Z's category. And then also when you look at people within the millennial category as well as the Gen X, you see that they are within the global average of 61%, but the Gen Zs have overshot that percentage by almost about 12 percentage points to reach about 73% in terms of the proportion of their income that is spent on feeding or food alone.
Great. So how about the 57% of the Gen Zs that are into investments? What kind of investments are they making?
Right. Typically, they look at the area of T-bills as well as fixed income.
Okay.
Or term deposits like we know. Now, what we realized is that because of their predisposition to be in the survival mode, even those who are finding the little they can to invest in T-bills and others are confronted with a number of fears. Some are thinking of, the effect or the impact of the DDP we just came out of. There's also some kind of orientation gap that exists because we realize that most of these Gen Zs do not receive the needed attention from banks. Banks are looking more at persons within maybe certain age brackets, maybe 50, 60, 40, thereabouts, who have the income, the disposable income to be able to invest. So that orientation, that focus on them, that education is missing. And the Gen Zs have not become the primary targets of some of these financial institutions. As well, there's also their predisposition to, having situations of instant gratification. And that's something we realize. And it is a typical feature of some of these Gen Zs. They want almost everything immediately. And so they do not have the habit of having to wait for longer periods of time. So these are some factors that we think are influencing or impacting them, even in the area of income that they are putting into investments.
All right, quickly, you made mention of treasury bills. Now, that is one particular market, I should say, that a lot of young Ghanaians would want to venture into. What does this tell us about higher risk markets?
Right, it's an issue of the investment objectives people have at any given point in time. People are viewing other investment options as being too risky for their liking. And so they would rather want to put their monies within, a 90-day treasury bill. Recently, the BoG rolled out a 14-day bill. So these have become go-tos for them. And it has become an easier way, at least if they can't do anything with their monies at all, they can put their monies within a 14-day bill, and that should be okay for them.
Right. Thank you so much, Dennis. Thank you for joining us.
We appreciate your insight here, always. So just, Gen Zs are quite not ready.
Listen, I think at this point, I stand in between the Gen Zs and because I also love to do short term, but just to see how it goes, and maybe later I could do a long term. Yeah,
so short investment, you hand the habits, and you understand the investment strategy and you move on. So now on Beyond the Numbers, we're moving straight to the big analysis. The big analysis this time around is MTNC Group CEO Ralph Mapute. He's telling us how the company intends to invest the vision for 2026. He sat down with Winston Amwa and they had an extensive conversation, and that is coming up on Beyond the Numbers. So we are stepping off as you enjoy the week and enjoy this conversation. And we'll see you same time next week. Keep watching Beyond the Numbers. Bye-bye.